Well, wild is maybe the easiest of the adjectives to use here. I mean, I find myself asking, are we having fun yet as we get started with these markets? And no, I don't think we found a floor. I think we have seen one very clear signal. The markets do not like these tariffs. They don't even like discussion of them. And every time there's some positive news, the market rallies 800 basis points. And when it's taken away, it rallies down 800 basis points. And markets don't like complacency, and they also don't like long periods of volatility, but they can continue to penalize investors by going lower and lower. And I think we're going to continue to see that until we have some actual resolution to this situation, which feels like it's going to be weeks or months away now, not hours and days like we had been promised under the negotiations in the heat of the moment.
It did feel as though the market would test Trump's resolve yesterday, and we certainly saw that in terms of the retreat on markets. I want to get into what's been won and what's been lost here, because it feels as though the game of confidence is being lost by Trump. He's losing businesses, investors. He is certainly not winning that confidence game. When it comes to the tariff side, though, he's made some claims that the US is now collecting $2 billion a day from tariffs. Some believe that is overstated if you look at the Treasury numbers. Is there a win at the end of the day here for Trump from this policy that has wreaked so much havoc?
Well, regardless if there is a win, and that $2 billion number seems overstated, particularly when tariffs are now, in some cases, going net down from where they might have been previously. But President Trump will find a way to claim a win. And the way out of this is for the world to find a way for President Trump to claim a meaningful win, even if it's not meaningful at all, so he can have a safe off-ramp, which is really the business of geopolitics and what I think the thing that investors have to look forward most to here. The rest of the world, the U.S. included, does need a good positive solution to this, and it may require everyone else coming together to help the U.S. find that solution, even if it can't find it itself. Because we don't believe for a moment that Donald Trump wasn't watching the equity markets. And we appreciate the bond markets may have been the undoing of this round, but we're also aware that the rest of the world is watching the same things, and they're invested in these assets too. So there needs to be some resolution soon.
Alex, can we talk about inflation for a moment? Because it seems that the markets have stopped paying attention to some extent to the latest data. So far this year, we were all focused on all inflation prints, but yesterday it seemed that was just swept under the carpet. Where do we go from here in terms of what sort of data points the market is actually looking at?
Well, inflation is still important. We didn't lose sight of it. Certainly the Fed didn't lose sight of it, and they reminded anyone who was listening and agreed there just were fewer people listening to it. With all the noise and volatility and wild swings, it was hard to focus on the true fundamental data. But inflation did ease some. It didn't ease down to the Fed's target. The Fed has made very clear that all of this policy change, uncertainty, has added net to long-term inflation concerns, and they're not ready to blink yet or anytime soon.
I also noticed in your notes you're suggesting to not buy the dip. My question here is, what would it take for you to go back into the market to some extent?
You know, we thought it didn't make a heck of a lot of sense to just run out. It's very easy to time the exit because you end the pain. It's really hard to time that reentry at the very bottom. We don't think, though, we've run out of steam yet. We don't think we've run out of steam on the bond market quite yet, although we do like still getting into the long bonds because we do think there's some natural floors that are going to emerge very soon. But I think we'd like to see some resolution with an initial trade deal with a large counterparty and a paradigm that we think can be spread to a handful of others. But that seems like we took a 90-day pause on that. We also don't know that 90-day pause is meaningful. This could end in a few days with a great announcement, particularly one from China, which we assume in the background there are conversations happening already. But this could also persist well beyond that. But that's the trigger we're going to look for, is some change in the geopolitics and some change in the tenor here in Washington, where it looks like we now have a plan and a path forward.